you'll find is that almost every territory will have some kind of grant funding scheme aimed at helping startups, and many have follow-up schemes as well. And one of the great things about grant funding is that it is essentially a gift. You don't have to repay it, which is tremendous. Now, one of the things that you do need to be aware of is that the applications can be a little onerous. So always read very carefully the rules regarding any scheme. And it's usually the case that, as you might imagine, you can't apply twice for a grant from the same scheme. But there may also be other restrictions regarding funding you've had from government sources. So do read the small print very carefully, because whenever you have the opportunity for grant funding, you should certainly try to get it. So on the whole then, grants are not repayable, but you may have to meet certain milestones, for example, job creation targets or some particular deadline, and ordinarily you may have to return some or all of the grant funding if you don't meet those milestones. So always under-promise in your application and over-deliver, so that you don't miss out inadvertently on some kind of milestone. Now, one thing to watch out for is that many grants are paid retrospectively, which is to say you have to pay all the cash up front, and then you put in a claim to reclaim that funding. So it doesn't cover you having the money to pay for things, it reimburses you on money that you've spent. So you still have to have that money available from your business bank account before you do it. So be very, very careful about that. As I've said here, some founders use their own savings or access a loan from friends and family to cover a period, and then claim a reimbursement later. So be very careful about what the small print says. There are people who will help you with an application process. I don't recommend it as a thing to do in every situation, but sometimes it's valuable. Accountants are not particularly the right people to do this. They may understand about accounting, but not necessarily about your business and your plan and your milestones and what you intend to achieve. But some firms do specialize as bid writers, particularly for complex applications, for bids, particularly for European funding, where multiple partners across multiple countries become involved. And so working with those might be worth your while. But really, if this is your business, I firmly believe that you should write your own application. If you don't write the application and somebody writes it for you, if you're called in for questions, how can you defend it if you don't really understand exactly what's been written? So where possible, try to ensure that you do write your own grant application. I think winning grant funding is always a good thing. I think that if you win grant funding, other financiers and other parties will have increased confidence in your business because it's been approved by an independent party. That approval can also help persuade banks to make loans or investors to buy shares, equity finance. So it is always very good to win one, but make sure that you always comply with the rules and regulations so that you never have to repay anything later. Non-traditional funding then is something that's very popular on a range of things. You may have seen those game shows on television, things like Shark Tank or Dragon's Den, which don't represent real life, but they're very entertaining. Sometimes, unfortunately, at the expense of the people who are pitching, which is why they're not really to be supported. But it's not like that in real life. The non-traditional funding that is in real life is working with investors, in particular, wealthy or high net worth individuals who want to put some of their hard-earned cash into your business, and they buy shares in the company, It's called equity finance, and the cash then goes not to you, but into the company bank account. And they're called business angels because they're there to help you. Why would they not want to help you? If they're giving you €1 and they're expecting you to turn that into €7, why would they not want to help you? So Dragon's Den, Shark Tank, it's all very amusing, of course, but not real life. So we're looking now here at a kind of halfway house, crowdfunding. And it's become very popular for young people to try to get crowdfunding to help them start a business. Some of that is fantastic. In particular, using crowdfunding to pre-order and pay for upfront one of your products or services can be great. Because if enough people buy your products and services up front and they're prepared to wait until you've got all the cash in before you actually produce it, that's very supportive. Crowdfunding can also be used as a donation. If you're wanting to do something that people want to, help support you with. But using it to sell shares does not make sense. So don't entertain that prospect. If you were to have 1,000 people invest €10, then that sounds great. You can get 10,000 investment. But how are you going to be able to talk to 10,000 investors? The trick really is to have 10 investors, rather than 1,000 investors. So crowdfunding does not work. So where it is rewards based, that is to say, you put money into the company and you get something in addition to the product or the service, or whether it's just pre-ordering goods and services, it's brilliant. Crowdfunding for making a donation to charity is brilliant, but crowdfunding for selling shares is not appropriate. So don't go down that track. And when you look at choosing a crowdfunding website, very few are free. Many of them are really offering you a service, acting like a clearinghouse, and they'd expect to charge some kind of fee. And some people charge as much as 10%. So if you raise 100,000, they're going to take 10,000. If you raise $1 million, they're going to take 100,000. So you've got to be very, very careful about the percentage they take and whether they charge a fee as well. So some of them charge a fee and a percentage, a flat fee, but then a percentage of what you make. You also want to know who are the people putting money into this? Are they experienced? Are they appropriate? This is not something where you want to be taking money from vulnerable people. So be very careful and cautious and look at the background to whichever crowdfunding website that you use and make sure that they have appropriate steps in place to protect how they do things. Now, in terms of pros and cons, then I think donation-based is a good opportunity, depending on what fee percentage the website takes. Reward-based is now not so much for the website, but for the person putting the money in. So they will get, let's say that you want to publish a book. And let's say the book is about the country that you're in. And there's a lot of people who might want to buy it, but you can't actually print the book until you have the cash coming in. And what you say to them is, we will send you the book once it's printed. So you're buying the book, you're also paying for shipping, but the book will also be signed by the author. And so that's like a reward. And it'll be signed to you personally, or you can make it as a gift, or we'll have a signed photograph of the author, whatever it happens to be. But something, if it's seen as a reward, people are happy to do. Equity finance is very, very different. And this is where crowdfunding is entirely appropriate. We'll talk about how to do equity finance a little bit later. There's something called peer-to-peer lending, and this is a new form of funding whereby people use a website and they're looking to lend money under special terms. So if you're looking to raise 80,000 from a bank, a new business may struggle very much to raise that because they can't repay it quickly. But peer-to-peer lending websites sometimes will put together 80 people who are prepared to lend you 1,000. Now, why won't the bank do it? Because you are high risk. So why will these people do it? Because you are high risk, and therefore they'll expect you to pay a high interest rate. So you have to decide whether these things are worthwhile for you. On the whole, not very often. When you choose one of those websites, be very clear as to how decisions are made and what security, if any, you have to put up. If you're having to pay a very high interest rate and they still want to charge over your house or some other kind of asset, I'd recommend you think again. So make sure you're very clear about all of this. And on the whole, this is not the top of the list of where you should be finding startup funding from. So a cautionary note then. Crowdfunding and peer-to-peer opportunities are not yet considered mainstream. And some people are nervous about the regulation of them, which is me being English and polite. They're not regulated properly. So please be cautious. If you are in any doubt, do not do it. Remember the old phrase, fools rush in where angels fear to tread. So be very cautious and talk to your accountant, talk to a professional advisor if you're not sure. Perhaps I'm being a little harsh here, but I don't think you should rush into something without good professional advice. In conclusion then, grant funding is fantastic and genuinely mean that. Governments that seek to help new, young startups by giving a grant, typically up to, well, in Malta, for example, up to 25,000 euros. That's terrific. That may not be all that you need, but it's a fantastic start. And providing you meet the rules of their scheme and you do what you say you're going to do, you can't spend that on buying yourself a Ferrari or going to the Caribbean for a holiday. But providing you do with the money what you said you were going to do, and providing you follow the other rules of the scheme, you don't have to repay it. It is fantastic. And it's one of the few ways in which young people can actually find funding for a new business. And therefore, it's really terrific. But before you seek any form of finance, do seek expert advice. If you are anywhere near an incubator facility, then go and talk to the people in the incubator who advise new businesses. They're often attached to a government function or more commonly a university. There's certainly one here in Malta. Our own Takeoff incubator is part of the University of Malta. So talk to the experts in there who will know about the local schemes, certainly for grant funding, etc., and take their advice. It's very, very important. So that brings us to the end of this presentation. Again,